When trading instruments go into a bear market, it can be difficult to spot a meaningful turnaround situation. When using the MACD, most inexperienced traders will be looking for the wrong reversal signal with frustrating and money-losing results. There is a better approach to using the MACD for timing reversals when trading any market, stocks, cryptos, ETFs, Forex, bonds, etc. For example, taking a look at the Nasdaq, since the highs of late 2021, we've seen the market go into a substantial bear market. So traders have been trying to time the reversal. For example, traders who are using the crossover here for an entry did get a couple days to the upside, but you can see this did not last because we roll over and take out the prior lows. So that did not work. And we can see that by the time we make this low right here, there was no positive divergence because we made a lower low on the MACD. So a couple of things to clean up our reversal timing. Number one, it is always good practice to, at the very least, insist on seeing some type of divergence. Here we make fresh lows and we have an improvement of the MACD. So that at the very least is your first true positive divergence over the last couple of weeks, which means this was a better reversal entry signal here based on this crossover because of the positive divergence. But believe it or not, the best entry actually in terms of momentum comes when you clear recent highs, or let's say areas where the MACD had stalled, especially the closer those rejection points were to the zero line. So in this case, movement above this area as the market is doing right now is indication of a more favorable entry level. In other words, if the market is truly looking to go higher, this signal here is more reliable and should produce a more sustained recovery move to the upside. The trick, as I have taught on my channel for many years, going back 15 years, clearing these resistance areas gives a better sustainable change in direction, in this case to the upside.